What's up, Banter fam? It's your host, Miles here. Welcome back to the show. In today's show, I'm going to be talking through the $3 billion of Bitcoin, which could be dumped onto the market years after the Mt.Gox hack. We're going to run through whether I think this will actually impact the market, whether it's a nothing burger, and what we should look to expect in the coming months as this Bitcoin is unlocked and released onto the market. We're also going to run through the charts because we're getting a massive move at the moment. We've just broken below 20K. Is 20K going to hold, or are we going to keep going lower and break through this diagonal trend line? That is something we also need to discuss. It's going to be a massive show, so let's get straight into it now. As I said, at the moment, we are getting this massive move to the downside. So this is my chart at the moment, and I want to run you through my chart and what I'm actually seeing as the key levels that we need to hold, and also try and give you guys some direction at the moment as to where I think we're going to be headed. So at the moment, we have this mid-range here, which is currently holding. Now, the mid-range wick is at 19.9, and 20K is that massive range that has held up as traditional support. So what actually happened overnight is we bounced and got rejected off this 50 MA right here. So the 50 moving average has kind of been a level that we've consistently seen resistance against, and we touched a couple times overnight, and now we've broken to the downside of this mid-range here. Now we can see if we move over to the 1 hourly that we did get this rejection, and if we draw the diagonal support in this wedge, we can see that we did actually break through this support. So the support was sitting at 20.2, we broke through, and now we're bouncing on the mid-range at 20K. So what I'm seeing at the moment is a further move to the downside. So on the 4 hourly, we know that we have this major support. So if you draw the diagonal in from the wick low and you draw it through these other critical touch points, we can see that that is generally where the price is gravitating to at the moment. So if we kind of draw in a potential bounce scenario, we know that we're testing the 20K level. We're likely to get, a bounce on the 20K and then test this support line. And that would act as critical support, for a move to the upside as one potential scenario. So we are gravitating towards the support line at the 19.8 region. And if you looked at Kyle and Sheldon's newsletter, The Daily Candle, Sheldon and Kyle specifically said that he was laddering in at the edge of this support. So he drew it from the body of the candle, and he's averaging in at 20K, 19.5, and 19.3 in this green zone. Because if we don't get a bounce, we know that the green zone is that next major level that we could potentially bounce in. So that's what Kyle himself is doing. But we do have another scenario where we actually break this zone. So if 20K doesn't hold, let's say we get a bounce here, we come and test 20, bounce, then it's very likely that we actually do come and we break this support. And that would send us into this green zone. But as long as we're printing higher highs, then we're not running the risk of downside. But if we stop printing, higher lows, then, we are running the risk of the downside. So what do I think is actually going to happen? What scenario is more likely? Do we get this bounce and we test, the upper mid-range again? Or do we break support? Well, we have to keep in consideration the macro at the moment. The macro climate with what's happening with China, the CPI data later in the week, and the general sentiment with the DXY pumping, I think exposes us more so to the downside than it does the upside. So if we don't hold this major support line, we are going to see the lows again. Like, it's very, very likely that we see 18K again if we don't hold support. Because at the moment, although, we are making higher lows, we can see higher low, higher low, higher low. Potentially another higher low here would be a long setup. If we do break this trend, then, we are going back down, and that's just logical considering the macro at the moment. So we have to be very, very careful of this major support line here, because if we break, then, it's very likely that we're going to come back down. So the play here is averaging into a long potentially on support and then setting a stop under the previous lows, or on the retest. So, if let's say we did break through and then retested, then that would be a nice short setup for further downside. So you really want to play our reaction to this trend. I wouldn't be longing or shorting in this area now unless you were laddering into a long. This certainly isn't a short zone. The only thing I'd be doing from this zone here is laddering into a long on the assumption that we bounce on support. For example, averaging in here, and then averaging in just below support on the retest. That could, be a potential play. But right now, I'm not doing anything because I want to see how we actually react. If we go into the 1 hourly, we want to see that strong reaction on support. So I'm not very comfortable opening a short here. I'm not longing either. As I said, Carl's averaging into a long. That's what he's doing. But I want to see how we react in this critical zone because we know we just broke this trend, this diagonal trend to the downside. We know we're bouncing on mid-range support. And then, this green support zone, which is 19.3 to 19.5, is very, very close. Now, if you do draw it from the body like Carl does, then this trend line would be sitting at 19.3. So that kind of green zone that I've drawn in, that is, your potential long zone if we do hold that zone. And that would be the next setup for a potential long. But I want to show you the macro charts as well because there is kind of a worrying chart that's forming at the moment. And I don't want to seem too alarmist, but at the same time, this trend is quite worrying if we look at it from a macro perspective. So if we zoom out and we kind of get our heads out of the 1 hour and the 4 hourly charts and we go back to the daily, we can see right now that we are forming pennants, which, are getting smaller. The ranges are getting tighter. And they're typically reacting to the downside. We know that the majority of exposure in this market is still remains to the downside. And we know that we've been kind of forming these pennants and then breaking down, forming these pennants and then breaking down. So we're in this last percentage of the range at the moment, currently sitting, between like 19.8 and 21.2. If we do break this pennant, we can expect to come down. And then the next target becomes 14 to 15K. What we want to see if you're a bull, you definitely do want to see a strong reaction at the bottom of this major support. As I showed you guys on the 4 hourly, this is the major support line. 19.3, to 19.7 is the range. You want to see a strong reaction there because if we don't get a reaction there, then it's very likely that this red arrow ends up playing out and we get this continuation of this pennant formation and we get another bearish price reaction. If you're a bull, you do want to see us breaking the upper echelon of the support, which remains at the 21.7 region. That's, that major horizontal level we've been looking at for about a month now. And if we broke to the upside there, then we can expect to retest the 26.7K region. So for bulls, you really, really do want to see us push higher and break this horizontal support at 21.9, 21.7 to 21.9. You do want to see a positive price reaction. So you'd want to see, I'll just draw it in here. You want to see a potential move. I'll get the path sign off support, bounce up, likely get rejected again, but then keep making higher lows, push up to this green box, and hopefully test this range high. That is what you would want to see, continuing to print higher lows. That is the structure to get out of this pennant. But until we actually start, making some highs, then it's very likely we break to the downside. And that's just the honest reality of the situation right now. Given the macro now, I do feel like we do get a relief rally at some point soon. But just looking at the charts and looking at the macro combined with each other, so the charts plus the fundamentals, it's very hard for me to be like insanely bullish here that we get this 28K push up, until some major levels are cleared. Like that's just the reality of the situation. So let's just keep our eyes on these charts. It's a very bearish looking chart, but let's just be real here and see and monitor how we actually do bounce off support or whether we break, because that's going to determine whether we're longing or whether we're shorting. As I said, Carl seems to be longing this 20K region. That is definitely a valid play if you think we are going to bounce. I'm personally waiting to see how we react at that level. That's just how I'm playing the charts right now. But 19.8 to 19.9 seems to be holding for now. By the time this video goes live and it's uploaded, it's very likely that potentially, we've gotten a reaction either way, but you guys are watching this live, obviously. So Ethereum, the Ethereum charts are doing a very similar thing to Bitcoin. The only difference with Ethereum is that we actually did break this support trend. Now, this is kind of scary because you're now relying on Ethereum to come back inside the wedge in order to remain in its bullish structure, its bullish short time frame structure. That's on the 1 hourly. If we go to the 4 hourly, we can see very clearly that we did break that support. Now, it depends how you draw this, because some people do like to draw this from the body of the candle, and then you would draw this down to the wicks, and then technically we're still on support. So it really does depend how you draw it. Either way, we know that 1,040 to 1,075 is that major level. It's the similar zone to Bitcoin that we really want to hold. Otherwise, we're definitely going back down to the lows of 880. So you do want to hold that zone. If we did break, let's say retest trend, then we know we're coming back down to 900. That's a potential scenario here, a short setup. So what you want to see as a bull is you want to see us actually coming down, holding this support. It can break below a little bit because we know the horizontal range is very strong, but then actually getting back inside this wedge and breaking to the upside. Because Ethereum is forming a similar downwards pennant formation to Bitcoin. So we know Ethereum is actually, the leader of the alts. So although, we want to track primarily the Bitcoin price in this market, we know Ethereum is leading the alts at the moment. So that's one, I've got an eye on as well. And then the DXY, this is probably the most relevant chart at the moment because it's really driving this crazy US dollar, which is now overtaken the euro. I'm pretty sure the euro and the US dollar are at parity, which means 1-to-1, which is the first time we've seen that since 2003. So it's absolutely crazy just how strong the US dollar is right now. And the DXY has been ripping. You guys know the DXY is the US dollar index, the Dixie, as they call it. So we actually broke through and, we're in price discovery. I think the last time we hit these levels is like 2002. I'm basically viewing it as price discovery because we haven't seen a dollar this strong in essentially 2 decades. So the DXY, the 108 to the 109 zone, we expect to have a little bit of a resistance there. I do think we see a pullback to this range at some point. I don't think this thing could just go parabolic. I think in order for the DXY to keep running, it does need to actually, come down and test this range that it broke out of. And that would probably mean coming back down to 107 and then, looking for new highs because it's still a very, very bullish structure. In order for this thing to flip bearish, we would need to see it come back down, test, show some weakness, come back into this range, and then, push to this next major zone at 105. That would be kind of its bearish breakdown formation. But right now, the DXY is one that is actually kind of a bullish signal for the market. So although the DXY is, historically inversely correlated with Bitcoin, meaning as the DXY goes up, Bitcoin goes down. As Bitcoin goes down, the DXY goes up and vice versa. The DXY at the moment showing some strength, as Ran alluded to on his show. It actually isn't the worst thing because most commodities, energy prices, they're priced in US dollars. So a strong US dollar means lower commodity prices, lower energy prices, lower relative valuations across goods and services. And that means that the inflation data, which probably comes out next quarter's data, which will reflect, the current movement in commodity prices, that data will likely reflect lower, which means the CPI will come in likely lower than what we're about to get this week, which would obviously give the Fed a little bit of license to ease up slightly. So the bullish logic for the DXY going up is that this gives license for the Fed to kind of take their foot off the pedal just a little bit. And if they take their foot off the pedal just a little bit, that, could potentially be a bullish catalyst for markets. So although the DXY is typically inversely correlated, we don't mind seeing a strong DXY as long as inflation is coming down and energy prices are coming down. If we get energy prices going up alongside the DXY going up and equities going down, that is very, very bearish. This current scenario with inflation is okay for the time being from a crypto and equities perspective, but we do want to keep our eye on its correlation to commodities because if commodities start ripping again and the DXY doesn't come down, well, that's a major, major issue. So let's keep our eyes on the DXY as long as it keeps kind of correlated with equities, that's okay. But as soon as we see this start to flip, then that's, bad news for crypto. And we ultimately do want a reversal because although at the moment, we're kind of seeing positive correlation, we know over time, it has been inversely correlated with crypto. So a lower DXY has typically been good for equities. We're just in a very unique situation right now with the current inflation data. Remember, if you guys do want to trade, there's a link to a ByBit account in the description. I think Sheldon's should be going live this week. So there'll definitely be opportunities to trade if you're not taking the longs from the newsletter already. And the sign-up bonuses is 4,200, as well as we're 10xing accounts live on the main show. So if you don't have a ByBit account, I highly recommend signing up using the link in the description. Get your hands on an account to trade because we know, at the moment, it's, our hodl bags are kind of stagnating a little bit. Trading's giving us a little bit of an opportunity to keep some cash flow ticking over, stay cash flow positive, which is something I'm utilizing as well. But the major topic of this video is this Mt.Gox hack. Like we can't deny this anymore. We can't keep our eyes closed and turn a blind eye to what is actually happening with Mt.Gox, because this is the largest amount of Bitcoin that we can see entering the market in a long time, at least since Luna dumped. If you guys remember, LFG, Luna Foundation Guard, they dumped 80,000 Bitcoin. The Mt.Gox dump, or the amount of Bitcoin that's about to be released, is actually 137,000. So it's 57,000 more than Luna. So we know it's a major event on the market. And we do have to keep our eyes on how this could impact the market, because, this could ultimately be the catalyst for either a major breakdown or a major breakout. But to be honest, most of the risk remains to the downside with this scenario, because not dumping likely won't see the price react positively, but dumping would see the price react quite negatively. So this is the big news on the market. So let's go through Mt.Gox a little bit. I want to talk through what actually happened with the hack, what is happening at the moment, so what the latest, why it's in the news again, because obviously it's been years since this has been in the news, so there's a reason why it's back in the news, and also talk about what can happen with the creditors' funds, because we know Bitcoin is being released to creditors. So will these creditors actually dump? I've got some data to suggest whether they will or whether they won't. I did a thread on this the other day, but I dug deeper into the data and I found a few interesting points as well that I want to share with you, and we'll kind of work out whether this will affect the market, because there's been a lot of FUD, a lot of people saying that this is a black swan, and I said this in my thread as well. It's being a term that's thrown around at the moment. Is this true? Is this actually going to cause, a 12 to 14K Bitcoin, or is it a nothing burger? Well, let's dive straight into actually what happened. Now, I'm going to run you through the basic rundown. I don't want to waste too much of your time, so I'll kind of get you guys up to speed for people that aren't up to speed. So Jed McCaleb actually started Mt.Gox as a Magic the Gathering online exchange. So MTGOX, which is the acronym, that's what it standard for, Magic the Gathering Online Exchange. So originally, he didn't even create this to trade Bitcoin. He created this to trade Magic the Gathering cards. If you guys don't know what that is, it's an online card game that you can play, trade cards with friends, and he started this exchange. Now, what actually happened is he had the exchange for 6 months, and after 6 months, he decided that it wasn't really worth the time. Not many people were using it. He was putting a lot of effort in, and he decided to kind of just shut it down. So the website remained stagnant for many years. Now, Jed McCaleb, obviously, being a coder, being a smart entrepreneur, he started to get into Bitcoin around 2010. So he started to develop an interest in Bitcoin, and what he realized was, there was a lot of interest in Bitcoin starting to grow after its white paper in 2009, but there wasn't really an easy way to transact. Like, the only way you could really transact with people was to go into the forum, to swap your Bitcoin with friends, to kind of, organize trades. And there wasn't an easy way to coordinate trading. So what he thought is, like, we need an exchange. We need to start an exchange to make this process a lot easier. So what he did in 2010 is use the old Magic the Gathering website at Mt.Gox, and use that infrastructure he had and the domain that was sitting there idle as license to start a crypto exchange. Now, he started this exchange and it was doing quite well. Like, a lot of people were using it. It started to pick up a little bit of steam. He actually made so much revenue over the first 6 months that he decided to sell. The website, it was obviously a lot of pressure. It was a very big undertaking, and it wasn't necessarily something Jed could handle without help. So he had a decision, like, hire help or simply sell it and cash out and make some cash off it. So he decided to sell it to Mark Capellas, which is a French investor, at a valuation of 6 months revenue. So he took 6 months worth of valuation and he sold it to Mark Capellas. Now, what Mark actually did was he, really took the exchange Mt.Gox to the next level. Transaction volume grew to 20,000 transactions a day at Bitcoin trading at $1. So at the time in 2010, Bitcoin was trading at $1, and Mark essentially doubled the trading volume within the first 6 months. So things were going quite well in 2010. And yeah, it was doing really well and continuing to grow. But it kind of started to break down from there. And the beginning of Mt.Gox's troubles really started once this transaction volume increased and there was more eyes on the platform. The first thing that happened was 25,000 Bitcoin were actually robbed from the platform in 2011. Now, it was only $400,000 at the time, but today those Bitcoin are worth $600 million in today's dollars. So what happened was in 2011, 478 accounts were robbed for 25,000 Bitcoin. And then a message was actually posted on Pastebin, which was a forum of the Mt.Gox user database. So someone actually stole the user database, meaning users' usernames, passwords, and posted it online in a public forum. So what happened after that is the hacker actually used these usernames to not only steal Bitcoin, but manipulate the price. And what they did is they put hundreds of sell orders into the market to essentially cause a liquidity crisis. And what happened was the Bitcoin price fell from $17 to 1 cent USD. So if you guys think the Bitcoin price is volatile right now, going from 21K to 19K, then $17 to 1 cent is what they were dealing with in 2010. This was like just crazy, crazy, crazy stuff back in the day. So that actually crashed the price, which obviously recovered very quickly because it was a short-term liquidity crisis, but it caused a lot of issues at the time. So Capellas investigated the matter, shut down the site, and then someone actually published the full list of usernames and emails, passwords onto the forum, which resulted in $9 million or $8.75 million being stolen, which is over $525 million today. And in the years following, the exchange saw many, 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 many issues. So in 2012, things were quiet. 2013, in the lead up to the next bull run, there were many, many issues. The first issue being suspended trading, which caused a 23% market crash. They saw the feds, seize assets from Mt.Gox's accounts. They were accused of money violation, money laundering. So they had a lot of issues over this time period. They had glitches in the algorithm to see more Bitcoin price depreciation. There were just many, many issues that were actually plaguing Mt.Gox. Why am I telling you all this? Because I think it's very important that you understand what actually happened before we can look at whether this latest release of Bitcoin to creditors will actually affect the market, because we have to understand what happened historically. It's no use just me telling you it will or it won't dump the market, because we got to understand what actually happened here, because there's some very, very interesting stuff which led up to this moment. So it had a series of controversies, but funnily enough, despite all the controversies, trading volume continued to explode. So we can see, if we look at the chart of Mt.Gox trading volume, this is from 2010, when it was first sold to Mark Capellas, to the current day, that the daily transaction volume on Mt.Gox basically went parabolic. Now, we know Bitcoin had that major bull run in 2013. So obviously there was going to be a lot of interest, into that, like we saw in 2017, like obviously we saw last year. Interest seems to increase, thus transaction volume increases, during these major times of volatility. But, we did see a huge spike in Mt.Gox, and it became by far the biggest crypto exchange. At this point, by 2013, Mt.Gox was handling over 70% of total Bitcoin transactions, making it by far the biggest crypto exchange. So you guys know right now how we have Binance, Coinbase, KuCoin, ByBit, FTX, and those are the big players. Well, Mt.Gox was basically all of them combined. It made up 70% of the transaction volume. Like, just imagine how big that is. That's like basically every single big exchange on the market right now combined. Like right now, like the biggest exchange, Binance, it probably does like an estimate, let's say 20 to 30% of transaction volume. Mt.Gox did triple that. So it literally was a behemoth. And it was basically responsible for any Bitcoin transaction at the time. It was absolutely massive. That's why its downfall was such a big event and caused so much controversy and has resulted in so much Bitcoin being stolen, because it was so big and so many people actually used it. So everything looked great in 2013, and then 2014, users started to complain because they noticed that their withdrawals weren't actually processing. So Mt.Gox came out and they said, we need a clear technical view of currency processes. As users were complaining, the forums were absolutely spammed. Like there were hundreds of pages, thousands of pages. And I went back and I looked through the forums, and it was nuts. Like thousands of posts saying, where are my funds? I'm trying to withdraw. They're not letting me withdraw. Now, if you guys know, like in today's market with Voyager and Celsius halting withdrawals, like we know how much controversy that has stirred up, even with them being relatively transparent. Imagine being in 2014, having your Bitcoin on an exchange, and the exchange for months not telling you why they're halting withdrawals or being extremely cryptic about it. Like that's just crazy. Like imagine Binance suddenly shuts down withdrawals, and then for a month, users are like, why can't I withdraw? And they just don't tell you, or they are very, very cryptic about the fact that they're not offering withdrawals. Like that is what was happening back then. Absolutely crazy how much things have changed, because there were billions of dollars in the market that people couldn't actually withdraw. And this was for good reason, because they found a bug in the software on the 10th. And at the time, people didn't know it was a hack. People thought it was just a little bug. And Mt.Gox said, we found a bug in the software. We're working on fixing the issue. They blamed it on transaction malleability, which is, considered to be a flaw in Bitcoin's design. It was later revealed that the true flaw was in Mt.Gox's design, not Bitcoin. But, that's kind of what they were blaming it on. And for the next 2 weeks, they weren't really telling anyone what was happening. There was angry customers left in the dark. The CEO, Mark, came out and said, we should be able to withdraw soon. And he said, we're committed to solving this issue. Now, you guys know how many, like Zushu with the 3AC situation, he said, we're committed to solving this issue. We know that Celsius came out and said a similar thing. Voyager, everyone that experiences issues comes out and says a similar thing. So history tells us when those lines start coming out, then we should be a little bit worried. And that's exactly what happened to Mt.Gox, because despite them not being transparent over how much Bitcoin they had lost or gotten hacked for, Mark resigned. So the CEO resigned from the Bitcoin Foundation, which he was a founding member of, by the way. Bitcoin Foundation being the biggest Bitcoin, activist group in the world, and, responsible for a lot of the positive change that happens for Bitcoin, etc. They removed all their Twitter posts. So Mt.Gox basically deleted all of their data off the face of the earth, and their website went offline. So people were starting to get a little bit worried, like, the website's offline. Something's very fishy here. We can't withdraw. And then it was leaked. The big document was leaked, which was this crisis management document that Mt.Gox was actually insolvent. And this was a shock to a lot of people, because the estimated figure that leaked was that they had lost 850,000 Bitcoin. Now, in today's dollars, at a $21,000 Bitcoin, 850,000 Bitcoin is 4% of the total supply, or $18 billion. Obviously making this in dollar terms by far the biggest Bitcoin hack or biggest crypto hack in history. One of the biggest hacks of all time in today's dollars. $18 billion worth, or 4% of the total supply. Just 4 days later, this leaked document came to fruition. Mt.Gox officially filed for bankruptcy. They admitted to losing 750,000 or 100,000 of their own. And then they released an official statement which stated they had found 200,000 of the missing Bitcoin. So they lost 850,000, 750 of which were user funds. Then they had located 200,000 of the 850. So now they've got, obviously, net losses of 600,000 Bitcoin, but they've got 200,000 now. So the question then became like, okay, Mt.Gox, like, we've lost 750,000 Bitcoin here, but you've got 200,000. So it's time to pay us back. And that's kind of the process that we've been in for many, many years. This process of creditors, or, just to explain what a creditor is, it was someone that is owed money. So, a creditor in this situation will be someone that had money stolen from them, and is owed Bitcoin back in return. So 200,000 Bitcoin was set to be returned, right? So what actually happened was the Tokyo court appointed a guy called, I want to pronounce this right, Nobuaki Kobayashi, and he was appointed as the rehabilitation trustee. So his job is to oversee the rehabilitation process and ensure the reconciliation of creditors is conducted. Meanwhile, CEO Mark Capellas, unrelated to the hack, was actually arrested on a 2-year sentence for fraud and embezzlement. Apparently, he stole $2.6 million from Mt.Gox computers. Apparently, he manipulated the balances to make it incorrect, to be more enticing to investors. So he went to jail in the meantime while all this was happening. So it was really up to, how do you pronounce it again? I don't want to get this wrong. Kobayashi, to actually oversee this reconciliation process. Now, many, many years, so probably for 4 or 5 years, this was happening in court. So the reconciliation process was being conducted. Many angry creditors were speaking out online, but nothing was really happening. It was just a slow process in court, which brings us to today. Because in November 2021, we did finally get news that a rehabilitation plan would be going live. Now, the rehabilitation plan outlines the intent to pay creditors. So it's an official plan which became final and binding to rehabilitate creditors that had lost funds in the Mt.Gox hack. Now, from November to July this year, obviously there are big time gaps between these events because the legal proceedings were just so tedious and took so long. We finally got an update. Now, this update happened 6 days ago. And I did my thread 2 days ago, and since then we have another update. And this is that the rehabilitation trustee is now prepared to make payments. So we can see here that the repayments are now ready. People that were owed funds or were involved in the Mt.Gox hack had an opportunity last year to apply for rehabilitation. And we know that they are currently preparing to make repayments. Now, it's estimated that the repayments will be occurring as soon as August, which is in a month. Probably as late as the end of the year, but we know that over the next 6 months, we are starting to gonna see these 200,000 Bitcoin being released. Now, if we look at their current balance sheet, we can see that they hold 137,000 Bitcoin plus Bitcoin Cash. So they don't own all 200,000 because they actually have been paying off creditors in the meantime, paying down some of their debt, but they still hold 137,000, which is 137,000 Bitcoin that isn't on the market, that is set to be released onto the market. So that's $3 billion worth of Bitcoin that's set to be released onto the market. That's supply that isn't previously released onto the market. And these creditors could be receiving it in a month's time, as soon as in a month's time. So will this affect the market? And this is the major question of this video. Will a $3 billion dump cause a crash? And if it will, should we be worried about it? Is it something that we can actually action and short? Or do we kind of have to sit on our hands here and use this as a buying opportunity? Well, I have an answer to that question. I have a strong opinion on this topic. Some people are saying that the Ethereum merge is kind of poised at the same time as the Mt.Gox users dumping. I personally don't see that as a scenario. I don't think Ethereum's flipping off the back of a Mt.Gox hack. I think that's kind of just hopium for Ethereum holders because, let's be honest, if Bitcoin crashes, although it would be a Bitcoin-specific crash and Ethereum dominance would increase, I highly, highly doubt that other altcoins in Ethereum don't see a hit. We know how correlated the markets are. Bitcoin being the least risk-on asset in crypto obviously means that if Bitcoin drops 10%, let's say, other altcoins in Ethereum typically have to drop further. That's just kind of like the law of how investors allocate capital. Like they allocate more capital to the safer assets, less capital to the risky assets. I don't think it's plausible that we see Ethereum just stay stagnant and they just allows Bitcoin to dump. So I don't agree with the flipping argument. Richard Hart, obviously using this Mt.Gox situation to flex his outfit. He actually replied like 4 times to this thread that I wrote. So obviously he loves me these days, which is, great. Richard and I are basically best friends at the moment. Although I don't agree with Hex or Pulse Chain. Sorry to any Hex or Pulse Chain holders. So the prospect sounds scary of a dump, right? And multiple people have come out and spoken against this. Ran, obviously, you all know who Ran is. He said that this is a huge deal. He said holders have held these since $500 and many of them will sell at $20K. He said even if only 50% sell, that's as many as Luna on the market. There's potentially double that. Ran also replied to my thread and he said, you can spin it however you like. 3 billion more Bitcoin that was previously not in the market will hit the market. So Rand's saying, Miles, like, whatever you say here, it doesn't matter. Bitcoin's hitting the market. There's a high likelihood we come down. And David also showed the statistics of Mt.Gox, alluding to the fact that this is 1% of the total Bitcoin supply that could be dumped onto the market. So there's a compelling case here for a dump occurring. Rand's kind of alluding to the fact that there could be a dump. I disagree with Rand. I disagree. And I'm going to explain to you why I disagree with Rand. Firstly, this is a game of psychology. If you're an investor, all right, let's say you're an investor in Mt.Gox and you put in, $1,000 to Bitcoin in 2013, and that $1,000 is now worth $1 million. You have psychologically been forced to hold over many, many, many cycles. You have seen the returns of the Bitcoin asset. You've seen the success of that asset, and you've seen historically that holding that asset is a successful strategy. So if that asset gets unlocked, considering we are down from 69K down to 20K, and you've seen historically the success of simply holding this asset, are you going to be tempted to sell said asset on its unlock? Well, the odds are likely you won't be. The biggest argument here is 100% psychological, that the majority of these creditors won't want to sell. The problem that a lot of people saying that this will cause a dump are making the assumption of is that 137,000 Bitcoin will all hit the market. We know this isn't true. We know that not every single creditor will sell. we know that it's probably less than 50%. So we can basically halve the impact at that point, because there will be a lot of creditors that actually don't sell. Now, many that wanted to sell would have likely already been either bought out by bigger funds who have absorbed their liquidity at at an agreed to price, or they've adjusted their crypto exposure accordingly. So if you're a creditor and you're owed 1,000 Bitcoin, let's say, then if you're an active participant in crypto, you've factored in to your calculations the fact that you'll be receiving this amount of Bitcoin. So you've likely adjusted exposure to other assets to get your percentage allocation to various crypto assets like Bitcoin, Ethereum, to their desired weightings. So it's likely that, you don't own much Bitcoin because you've already pre-positioned your portfolio to own, the desired amount of Bitcoin. And presumably, if you were involved in crypto and you had funds in Mt.Gox in 2013, you're likely a long-term crypto participant. Unless you totally lost interest, which can be the case, it's likely you're a long-term participant. As I said, the biggest argument is psychological, and that although, all right, let's just hypothetically say that 3 billion does hit the market and 137,000 Bitcoin, I don't know, let's say every single creditor decides to sell, and they just all decide to sell and they all hate Bitcoin, which isn't the case, but let's just say they do, then would this cause a market crash? Yes. I mean, it would, obviously, because LFG dumped 80K Bitcoin, 3AC sold billions of assets as spot onto the market, and we saw how that affected liquidations, and miners continuously dump large amounts. But these events account for billions of Bitcoin hitting the market and result in a huge price hit. But the major difference here is that 3AC wasn't just selling, that actually caused a sentiment hit. So 3AC selling, LFG, obviously, Terra capitulating, then all the contagion with Celsius, Voyager, etc. That takes a massive sentiment hit to crypto. The Mt.Gox hacked, we've known about it for many years. We know that the creditors owed funds. This isn't an event that I think will impact sentiment, because people expect this sentiment to some extent. They expect Bitcoin to be hitting the market. So it's a very different scenario, because I don't view this as a scenario where longers are really reckless with their leverage and reckless with allowing liquidations to happen. That's just personally not how I view this situation. And I think the major logic here is that not all creditors will sell. There's been actually a stat, very interesting chart. Ted Boydson posted this. He said 41% of Mt.Gox creditors on Reddit said they would hodl for 5 years at 50K. So there was actually a Reddit post in the forum. Now, obviously, it's a small sample size. Only 324 out of the likely 10,000 creditors actually voted. Probably more, actually. But given the small sample size, 50% said they will hodl all of it for at least 5 years. 50%. So let's just assume that is the figure we're running at. Let's say 50% say they're not selling any of their Bitcoin. So that already takes the 140,000 that was going to be dumped down to 70,000. Now, of the 70,000 that will sell, they won't sell it all at once. You'd be stupid, just as you're stupid to ape into a 69K Bitcoin, you'd be stupid to sell all of your 20K Bitcoin at once. This would be a slower drip DCA ladder out, in my opinion, than it will be just a dump. It's not like August 10th, all the Bitcoin are just going to be dumped onto the market and suddenly everything crashes. I think it'll more be a slow drip of supply, a slow drip of the, let's say, $1.5 billion onto the market over time. And of that half, don't tell me that 50% of people are selling 100% of their Bitcoin. I think that's rubbish as well. I think if you're getting 50% of your Bitcoin, you're selling, let's say, I don't know, half of that, which puts the 140,000 down to a 25% price impact, or 35,000 Bitcoin. Now, would a 35,000 Bitcoin dump on one day affect the market? Of course it would. Would it affect it 30, 40%? No. It might cause a breakdown of 10%. It definitely might cause a sentiment hit. It definitely might cause a bit of panic. In fact, the pre-capitulation to the dump is probably and likely going to be even bigger than the actual dump itself, because we know how markets love to price in drama. So what I'm expecting is later towards August, September, when we get an actual date on the reconciliation. Right now we don't have a fixed date. My assumption is that on the exact date that's released, we probably see a little bit of a sale in the lead up to this date, because people are going to say, oh, there's a dump on August 20th, let's sell, let's de-risk ahead of that because we're scared. We probably see a dump beforehand, and then on the actual day, we may even see a rally, because the market now expects this. The more people that post this data, like my thread got 2 million impressions. people like me that are actually posting this reduce the likelihood of this dump actually occurring. So you guys should be happy that I'm actually doing these posts, because the more people that know about a black swan, the less likely a black swan becomes. Because the more people that know about it, the more the market has time to price it in. So if there was no posts and no media coverage, yeah, it probably would dump the market a little bit more. But everyone is talking about this, and there's only going to be more and more and more people talking about this in the lead up to August, which makes the likelihood of some crazy dump less likely. So those are my reasons for why the price won't trigger a massive collapse like many are expecting. Rand may share a stronger view than me that there will be a dump. I disagree. You have to make up your own assumption based on the data I've given you and your own data that's publicly available, whether you think this will hit the market. I'm telling you my reasons that psychology suggests that there won't be. Will there be a price impact? Yes. In fact, it's almost illogical for me to sit here and say that there won't be at least a multi-percentage price impact, given the fact that this is a major supply hitting the market. There will be a price impact, don't get me wrong, but the likelihood of a price impact which sees a doomsday scenario is very, very low, in my personal opinion. Obviously, this video isn't financial advice. You have to make up your own decision, but that's just my opinion on this. If Ram wants to debate this, I'm happy to have that debate live in your show, Ram, because yeah, it depends if you have a differing view to me or if you actually share the same view. I think the impact will be a lot less than a lot of people are thinking, and that's just my personal opinion. I'll answer a few questions now. I've got a couple minutes because I know a lot of you are probably going to have questions. So ask any questions you have, and yeah, I'll do my best to answer. Are you from the UK? I'm an Aussie, bro. Happening in early August. We don't actually have an exact day on rehabilitation. The reason I'm saying August is because that is what's being rumored. However, the payments are likely going to be staggered. I doubt there's just one day where they unlock 137,000 Bitcoin. Probably happens over the fourth quarter of the year. So let's say August to December. That would be my best guess, Elizabeth. Mars showing kahunas. Yeah, I mean, look, I just show my opinion, right? Like, this is what I do on my Twitter. By the way, if you're not following my Twitter, I highly recommend following me. There's a link in the description to that. You obviously get content like this on the regular, these massive threads, which if you have the time for, I think, can really help you guys out in the market. So follow me, link in the description if you want to follow me on Twitter. But yeah, I mean, I just share my opinion, man. It's just, I'll always share my opinion, no matter, whether it's controversial or whether you disagree. I think that's the very important thing about crypto, that we have multiple perspectives in the market, right? Who does your hair? I do it every morning. It's always wet on the shows because I always have a shower before the show. Missed the Sunday show. Yeah, we didn't actually do a Sunday show because SoundsTricky was busy and a little bit sick, and I was just like, look, I'd much rather just resume the Sunday shows next week when you're better and you're fresh, rather than just doing it for the sake of it on Sunday and having an underwhelming show. What would you say your hit rate on trading is these days? I've been doing quite well. I had a rough weekend. I lost a couple trades in a row, but before that I was doing quite well. But I would say you only really need to hit like you can afford to lose 6 out of 10 trades and remain profitable if you have the correct stop losses. So you actually only need to hit like 40 to 50% of trades. If you're getting 50% of trades, that's a very, very good ratio, because your stop loss, you're not losing 50% of capital. You're losing, let's say, 20% of capital, including leverage. So with trading, you don't need to hit every trade. In fact, it's great to get stopped out. That's fine, because it's all about risk reward, right? So if you, let's say, want to play this long and we bounce on support here, we bounce again. Let's say you long at this key zone. So you choose to long at, it just deleted itself. No, let me get this back up. Let's say, you long at support here and we do bounce back up. And then you decide to take a long here and, you set your stop loss below the previous low, let's say here, you're actually getting stopped out at 20% with the 10x leverage here. So you're not, in fact, is that even true? Yeah, it's a 2% move. So you're losing 20% of your capital. Now you can afford to do this 5 times to lose the majority of your capital. So all you need to hit is one positive trade every 2.5 20% stop trades, or every 2.2 trades, to stay profitable and break even. So trading isn't about winning every trade. Trading is about winning more than you're losing percentage-wise. So if you do get stopped out and you're wrong, and the Bitcoin price, instead of reacting like that, goes down and let's say, it tests and then it breaks instantly and you get stopped out, that's okay because, you have another opportunity to get back in and you're not losing all your capital per trade. So, I don't aim to hit it to win every trade. I aim to win more than I lose. I think that's the major, the major strategy when you're trading. That's how you trade, right? Do I have to open another ByBit account to join? I already have an account. No, you don't. If you already have an account, that's fine. I know a lot of you do, but I know some of you don't as well. So if you don't have an account, there's a link in the description to sign up. The $4,200 bonus, I hope it's here forever, but I'd probably be lying if I said it would be. So if you don't have an account, like the sooner you can get one, the better because of the bonus. And, I want you guys to, obviously we own referrals. That's how we pay the bills. But at the same time, you guys also benefit as well from these links. So it's a win-win. So if you don't have an account, you can sign up using that and support the channel. Moonbeam staking vid probably comes soon. I must say there's not like a crazy appetite for DeFi right now, but it's certainly valid if you're hodling Moonbeam or Polkadot. All right, you're right, Miles. The more impact, the more you write about the Black Swan, the less impact. Yeah, 100%. So you guys, I'll just write about it every day, and then it won't happen because I'm sure everyone would just get sick of me being the Mt.Gox guy at that point. I might do another update thread on it as it becomes more relevant. My next thread will probably be when we get an exact date on reconciliation. That would be, I think, quite necessary. But until then, there'll be a lot of media coverage. Don't you worry. Who has the balls to go long now? Just before I end the show, there is a long trade. There certainly is a long trade, which Kyle revealed on the newsletter. So if you're not subscribed to the newsletter, obviously you can do that in the link in Sheldon or Kyle's bio. Or Kyle himself is laddering into a long. I'm paraphrasing here, but roughly at 20K, 19.5 and 19, like throughout this whole support range, this green zone and this trend line here, that's his long. His theory for the long is that as long as we hold support, so as long as we're making higher lows, as you can see, higher low, higher low, higher low, then these higher lows will ultimately maintain enough structure to support a long trade. Obviously, though, as soon as we see, a breakdown below, these previous lows, then we've completely broken structure and we're likely going to see much lower levels. But if we can hold above the higher lows and continue to, maintain support, then there is always a long trade here with your stop under the previous low. That's, basically the law of taking a long, right? So you can definitely long this support line, 100%. Definitely do. I'm personally not, just because I'm trying to be a little stricter with my capital, but this is a trade. And look, I may consider it. I may come on the show and I'll update you. Tomorrow, I may have actually taken this long. So I'll just update you whether I do that. But it's up to you. Like Carl's doing it. You can follow him. You can make your own decision. Like the beauty of crypto is we can all make our own decisions based on, how we personally view the market. So yeah, thank you guys so much for joining the show. Hope you enjoyed. I will see you tomorrow, same time, 7 p.m. EST. Hope you guys enjoyed. Have a lovely day, and I will see you in the next one. Peace out.